Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I am here as ever with Francis. Sadly, no Tom again this week. One day we'll get the whole gang back together a bit more regularly. But Francis, how are you doing this week? How's it been?
I'm doing very well. It's been a very busy week as per usual. Things are getting very, very festive, I'd say, in the industry right now. I feel like we're hearing a lot about for better and for worse, I suppose, about people being aware about fraud in the holiday spending season. And just how to best manage your money when you want to spend it all. But no, it's been a very good week. How about yourself?
I completely agree. It is definitely getting into the Christmassy mood. I mean, our listeners won't be able to see this, but I'm loving the little Christmas tree you have just in shot as we're recording. It is time. I'm ready for Christmas, and it's not, it's still quite a few weeks away, but I am ready. But what you're saying about people thinking about spending money and things like that kind of really ties in nicely to what we want to talk about today. So what is the article that you are bringing to the table?
So very much on the topic of payments. My article today comes from checkout.com, and it's going to be about Generation Alpha already being comfortable spending online and considering buy now, pay later.
Awesome stuff. And then mine, on a kind of similar train, but also not really, is about a new eligible product that helps mortgage lenders engage borrowers and ensure that they make informed decisions. But you know what? If we're in a Christmassy mood, and Christmas is very much the time of spending, so why don't you take it away with your article, and we'll talk about that one first.
Maybe I should have phrased it differently, because it's not necessarily about holiday spending so much as it is just about spending in general. But in the UAE, Generation Alpha, those aged between 8 and 15 years old, are already showing signs of spending independently in the digital economy and are offering insight into where the future of e-commerce may be headed. So Checkout.com found that apart from Generation Alpha being the beneficiaries of their parents' spending, 75% of 8-year-olds and 92% of 15-year-olds are making payments themselves rather than via a parent or an adult. So through Checkout.com's latest research it conducted across the UAE, UK, US, and China, it revealed that and compares a number of trends related to the growing spending power of this consumer category. So 54% of millennials shop on direct-to-consumer websites, while 51% of Gen Z turn to social media, preferring to shop via social media platforms, underlining the growing preference for social commerce. So Checkout.com has indicated that Generation Alpha in the UAE is leading the way in e-gaming services compared to the UK, China, and the US. So on average in the region, the demographic spends around 47% of their allowance on games, while children in other countries spend 28%. So despite their young age, the Generation Alpha children in the UAE over the age of 13 are already getting well acquainted with buy now, pay later. And around 11% have shown a preference for BNPL as a payment method. So what I wanted to discuss with you today is really, does this come as a surprise that we're starting to see so many young people and children for that matter really starting to show an interest in BNPL? And do we need more education for them, or is there enough education out there already? Because obviously BNPL is a form of credit in the sense that, it's spending money that you don't have right now. And I think when you think about that and the way that, well, at least I know when I was a child, I'd say I just want to spend all my money straight away. And then I didn't really think about the long-term consequences of potentially saving as much as I perhaps could have done. So with that in mind, I wanted to get your thoughts. Is this almost worrying, or is it encouraging that we're seeing so many people or young people turn towards BNPL already?
I think it's actually a really interesting question. And I think where a lot of people will probably find it worrying, I can see there being quite a lot of, the usual kind of uproar and worry about this kind of thing. I don't actually think personally it is as worrying as maybe some people will find it. I think actually what it is just goes to show you that things change. The world moves on, different things happen, and different technology and different ways of doing things come into the mix. And I think this is just a prime example of how that works when it comes to spending and spending money. You know, if I think back to when I was a child, you know, I'd get pocket money, Christmas money, birthday money, that sort of thing. Most of it was taken by my parents and put into my bank account, which was terrible because I wanted to spend it. And then the rest of it, if I ever wanted to buy anything, it would be, you know, when we went out shopping, or if I wanted to buy something online, I had to go and like beg my mum to buy it for me because I didn't have a card or I didn't have any way to be able to make purchases online. So I think it's really interesting now how that's all changed, and like young children, well, I suppose not super young, but you know, children are able to, you know, get well acquainted with kind of online shopping and using different things, especially through gaming and things like that. And so it just kind of goes to show you that just things change, and that's just the way it goes, and that's a good thing. You know, change is a good thing. I think the worst thing you can say in any context, whether we're talking about this context or like in anything ever, is, you know, that's the way we've always done it. That's the way it's always been. When, you know, things change for the better, and it's, you know, it's just moving forward, especially when we think about sort of the digital economy and fintech as an industry. It's just moving things forward, right? And as a result of that, it means things get younger. So actually, I don't think it's as worrying as it could be. I think what we have here is actually an opportunity to make sure things are done right, because I think we talk so much about, you know, financial education and making sure people understand what it is they're getting themselves into. And we also talk a lot about how, you know, we should start that early, and we should really, you know, get kids young and let them understand what finances are and how to manage them. And if we have this data that says that children are more, you know, comfortable with online spending and they're already doing it, I feel that this gives the whole industry an opportunity to actually do things the right way and go, okay, well, if Generation Alpha are, you know, well acquainted with online spending, they're already interested in buy now, pay later as a payment method, let's start learning, let's get this curriculum in schools, let's get this right first go, so that when these 8-year-old kids grow up, suddenly they are masters of finances. Like, they know exactly how to use their finances, they can manage their credit, they can manage this, that, and everything else. And suddenly we have a generation of just wonderfully economically minded people that know exactly what they're doing. And isn't that the goal at the end of the day? That the goal is to make sure people understand how to manage their money, how to do their finances, how to manage credit, how to use things like buy now, pay later correctly in a way that will benefit them rather than damage them. So if we start that early, because if they're already doing it early, we may as well get ahead of it and make it a thing, make it an official thing in the curriculum, like legally or whatever, and actually do it that way. And I think that could be a really incredible opportunity that someone needs to take advantage of, whether it's, you know, from a government level or from just, you know, a fintech level, whatever. But we all, you know, and it kind of comes into that idea of you look at what your consumers want, you look at what your customers want. And if your consumers happen to be Generation Alpha, then that's where we need to get in and start making a change. And I think another thing that's really interesting is the social commerce aspect of shopping and spending, you know, with social media really being on the rise in terms of a source for finding out, you know, about products and stuff like that. And I think you could see that a lot with TikTok and Instagram specific, but I think specifically TikTok, because obviously they have their TikTok shop element. So, you know, let's get in early and let's teach kids how to do that and how they can do things for the benefit of them. So yeah, to answer your question, I don't think it's as worrying as a lot of people will say it is. I think there'll be a lot of fear mongering. I think there'll be a lot of parents and a lot of just people in society in general that will come out of the woodwork and find that really worrying. And there'll be a lot of claims of, oh, the kids of today and back in my day, things were better. But actually, this is just how things are going. This is the way of the world, right? The whole point is to move forward. And if moving forward means Generation Alpha spend money online and know what buy now, pay later is, then let's embrace that and actually make it work first time.
So that last part, I agree with for sure, that if they spend money online and know what BNPL is, that's a good thing. Where I sort of disagree with you, however, is the idea that they should be using BNPL now, because I think they don't have the funds to be able to, you know, pay off interest if they have late payments, or if they miss a payment, the people that are going to have to help them out, their parents. So I don't think it's necessarily just fear-mongering for the sake of fear-mongering. I think there's definitely some reason behind it, because parents are always going to always say that, their kids aren't smart with money because they want to buy their own things that their parents don't really care about. And that was the way when I was a kid. I'm sure it was the way when you were a kid, and I'm sure it'll be the way in the future as well. It'll always be kids have their own interests. They want to do their own thing, but then their parents are there to help them afford their hobbies and stuff and do what they want to do. But as I said, the issue lies is if a child doesn't really understand the value of money, and they say, oh, BNPL, yeah, let me pay for something which is 200 quid. They might only have 20 quid in their bank account, and then say like, oh, but I'll pay it in 10. So they'll pay the first payment, that's that 20 pounds, but then they won't have a way to pay off the rest. And the people that will have to be, or left to pick up the pieces, will be their parents. And I think in that regard, perhaps the solution will be BNPL firms putting a limit on sort of children's accounts potentially, or doing something like that. Because like you say, having the access to it and knowing about it is really good and really important. And I think as they probably grow up, sort of reaching 15, 16, they'll start to realize the value of money and sort of think, right, at this point I can sort of start saying, right, I'll pay £10 here, £10 here, £10 here. And then by the time they're in their 20s, they can do hundreds or even thousands in that sort of regard. But I do think there needs to be some sort of limitation, at least from, the 8-year-olds to sort of 12, 13, even 14, really. I think there's just an immaturity level which doesn't recognize the value of money for a lot of children. And I think that is a risk especially like you said, sort of the rise in social media. Every child, I think, nowadays has access to social media. That's different from when we were growing up. And again, not to sound like that broken record that says, oh, back in my day, we didn't have that, which is crazy because I don't think I've ever actually been able to say back in my day I didn't have that. But there you go. I feel old now. But I do think that there's I don't know. It needs to be done properly. Do you know what I mean? Like I think there's a very, very big risk if it isn't.
Yeah, and I think I completely agree with you. I think for the record, I'm not suggesting we let 8-year-olds use buy now, pay later. I think it's more in my head. There's always been things like this. I think, like, yes, I think then hang on, let me get my thoughts right. Let's not give 8-year-olds buy now, pay later, but I think there must be a way that we can engage them in this industry in a way that is safe and makes sense for them. And whether that's like parental oversight, I don't know. But I think there's always been ways for kids to mess around with money. I think that's not a new thing entirely. Like, not to completely put my older sister on blast, but when she was younger, she racked up like a £700 phone bill, which she couldn't pay because she was 13. So guess you footed the bill. My parents did. So it's kind of a similar situation where you're saying there, like, if kids can't, rack up a buy now, pay later bill that they can't pay, then it falls to their parents. But like, that's been the case forever. Not that it excuses it, but I think there's got to be a way, and I think there's going to be people who are more knowledgeable and know more about it than me that I'll have to figure it out. But there's got to be a way that we can engage children in this industry in a way that makes sense, whether that's through, the great apps that you can get that are all about sort of financial education for children, or like the bank accounts you can get, whether there's something there that you can do it, that they can sort of ease them into kind of this like buy now, pay later kind of idea. I don't know. But I think there's something there. Let's not let 8-year-olds use buy now, pay later, because you're right. I don't think there's the level of understanding of money. I don't think I understand money even now, and I'm 28 years old. So I completely agree with you on that front. But there has to be a way that we can get kids engaged and interested and understanding of this industry and the products and solutions that come with it in a way that's safe for them. There has to be a way to do that.
That I agree with.
Yeah.
That I agree with. The engagement side of it and sort of taking the interest in it, absolutely. Just the accessibility to potentially abuse it, that's where I think there needs to sort of have a line drawn. But yeah, we'll wait and see. And
I was going to say, it's going to be people a lot more clever than us, I think, about both on the fintech side and like the child psychology side of it.
Yeah, absolutely. Yeah, with that, why don't we go over to your article?
Yeah, absolutely. So, like I said, it's kind of a similar article, but also not the same at all. But basically, Eligible, a UK-based AI-driven servicing solution for the mortgage market, has launched Conversations, a new product enabling clients to engage borrowers at critical stages of their mortgage journey to ensure customers are making informed decisions about their mortgages. And this is why I'm saying it's kind of similar to what we just spoke about, because it's all about being informed and understanding what it is you're getting yourselves into. So, by leveraging machine learning, constant mortgage monitoring, and other techniques to better understand consumer intent, Eligible aims to tackle what it believes is the prime factor holding the mortgage market back. So, essentially, which is sort of infrequent direct contact between lenders and their users, poor communication, and just a general lack of solid touch points, which they believe has led the lending landscape to a place where banks are far less likely to have a bare complete picture of the audience, and building trusted consumer relationships is difficult. So I thought this was really interesting because, again, it kind of harks back to this idea of, do you know what it is you're getting yourself into when, you're signing up for financial products and services, and particularly when we think about mortgages, which is a big one, right? That is you're putting a lot of money on the line and you're signing your name away to owe the bank, hundreds of thousands of pounds, if not more, depending on how nice your house is. And I think it's just a really interesting thing. And it kind of stuck out to me because it started me thinking, you know what, actually, when I sorted out my mortgage, did I know what I was getting myself into? I don't think I did. And then I started thinking about, when I was going through the application process of applying for that mortgage, at no point did I ever actually speak to a bank. I had a mortgage broker, so I guess that adds into there. So, but at no point did I ever speak to a bank. At no point now, if I have an issue or a question about my mortgage now, I actually don't know how I would ask that. I don't have, a kind of a mortgage account that I'm aware of. I don't have this, just the money comes out of my bank account and that's kind of it. So it really got me thinking, like, yeah, this kind of solution, this kind of product actually sounds like it could be really useful, because there are so many points when we come to these big financial products, big financial solutions, that you kind of do feel like separated from, the people, the company that you're making that big decision with. And then you kind of feel really silly for asking, because it's kind of one of those things that, you should know about because you're a grown up, or, you should understand how to do finances because, you just should. And it's one of those things that I think, again, similarly to what we talk about with your article, it's something that we need to really nail down and start doing early, because understanding, mortgages and other financial products, I think, is so important. And being able to really, and having, the banks go, do these people understand what we're offering them through, leveraging AI in Eligible's instance, I think is a really interesting idea. So, I mean, I'd love to get your thoughts on it. I mean, there's a lot to be said here about, utilizing AI and in terms of, kind of measuring customer understanding and, whether they'll be able to afford a mortgage and things like that. And I just, I think there's a lot of good to come from education and support in these kind of solutions. So, I mean, I'd love to know what you think on this, Francis.
Yeah, it's interesting you say that, because I think the degree at which AI can be used in this process it is really important. But I think, and it can be really beneficial, especially to get the customer understanding. So from the lender's point of view, I think using AI to get to know their customers first is probably, a very, very good way to go about things. But in my opinion, I think where these lenders can then sort of separate themselves, or differentiate themselves, I should say, from the rest, is by offering some sort of human touch to things and sort of creating this customer relationship or customer lender relationship, and not just being a service that people use once. Like you said, you used it once, and now who do you contact? Whereas if I feel like you had someone that was constantly checking in with you on the process and was sort of saying, any issues down the line, just get in touch or something like that. Plus, I feel like there's a big thing, and especially with sort of the mortgage side of things, I think, because I'm not sure if you would agree here, but in my opinion, there's a bit of a, I don't want to say it's a taboo, but it almost is a little bit. And there's an idea that the financial industry sort of look down their noses at their consumers sometimes, at people who perhaps don't know as much as they do, and they think, oh, I'm better than you because I know this stuff about lending, and I know sort of about interest rates, and I know this, that, and the other, whereas you don't, therefore I'm better than you. And I think that there's an idea, if that can be broken down, and we always talk about how fintechs are supporting their customers, and there's no reason why, and how not even just that it's a deal breaker as well in many cases. So there's no reason why a lender in the mortgage sector can't also take those benefits that a fintech would have and apply it in this industry and see sort of the same benefits from it. I feel like if there's an ongoing sort of conversation, I mean, not forever. I mean, you say now, like, if you had a question about your mortgage process, I mean, that was what, 2 years ago now? I want to say maybe more, but I imagine that, or three, there you go. But I imagine there's probably not been that many times where you've thought on like a monthly basis, or even, well, yeah, monthly basis, oh, I need to ask a question. So I think it would be few and far between. But at the same time, I think it would be nice if, the lender reached out and said, do you have any questions? And then you can say, and then you can just opt in and say, no, I don't want to hear from you again, or something like that. I think it just shows that there's options available to the consumer. And I feel like that's always the best way for a business to be run in the modern era. But yeah.
I completely agree with you about the kind of taboo nature of things like this, because you are absolutely right in that there is kind of a lot of, I don't know if you'd call it like pure looking down on, but there's definitely a lot of kind of this idea that you should just know what you're talking about, and I think when I was going through like the mortgage process 3 years ago, I was asking like a lot of questions to our mortgage broker, and there definitely was kind of an element of like, oh, they're just like silly young kids who don't get it. And, even though they were very helpful and answered all my questions, there was definitely this air of, yeah, okay, whatever. And I think that definitely carries over. And while you're absolutely right, there has been no point really in the past 3 years that I've had like a really burning question that I've need to ask, because obviously I'd have then figured out how to ask it. But I think, there's just zero touch points. There's zero communication. The money comes out of my bank account and that is it. Like at no point, I think I get a letter every now and again telling me how much money I still owe them, which is, a wonderful letter to receive, as you can imagine. But other than that, that is kind of it. And I think it's really interesting. And especially kind of if you consider, like, not to give out the full details of my mortgage, but like I'm on like a fixed rate mortgage, which is coming to an end very soon. And I don't know what I'm supposed to do afterwards. Like, am I supposed to like remortgage? Am I supposed to like speak to my current mortgage provider and like figure out a new deal? Or like, at no point has anyone ever actually told me that. So it's one of those really interesting things where you're absolutely right. I think there's just an air of, you should already know about this. You should already understand this. And this is something that you need to do. And I think that comes up a lot in life. And I don't know if you're noticing it as well as much as me when it comes to like, now we're like navigating life, being in 20s and starting to do things like get houses and move out and things like that. But there's so many times in life it comes up where it's like, man, I have no idea what I'm doing. But then I think you kind of realize that no one has any idea what they're doing apart from the people who are in charge. So the people who are in charge of mortgages, they seem to know a lot, but they won't tell anyone else. And that's annoying. And that's where I think solutions kind of, like Eligible, can really help break things down. And I think it's just so important. Like we were saying before with your article, people just need to understand what it is that they're getting themselves into, and people just need to know how to navigate their financial life. And if they don't know how to do that, then we all sit around scratching our heads wondering why people don't understand finances and why people get into trouble with debt or credit or anything like that. And actually, if we all actually step back, I say we in the royal we all step back and actually thought for a minute that no one ever actually teaches you this stuff, maybe that would make sense as to why everyone's really rubbish at money. Maybe, just maybe. I don't know. It's a thought. I'm getting on my high horse a lot today. I do apologise. But anyway, I think that brings us to a lovely close of our discussion. Thank you so much, Francis, for bringing your articles and your opinions. If you want to hear any more about anything we've talked about today, head on over to thefintechtimes.com, where we've got plenty other news and insights over there. But very quickly, let's move on to what I learned this week. So each week we learn so much new stuff being on the editorial team that we wanted to share that with our listeners. So Francis, what have you learned this week?
So this week I learned that the financial sector is likely going to have the biggest salary growth in 2025, according to 3R Strategy.
Awesome stuff. And what I learned this week is, according to the Afterpay and Cash App report, roughly 25% of consumers haven't used a traditional checking or savings account in the past year, which I thought was really interesting. But anyway, Francis, thank you so much for joining me today. Hopefully we'll get Tom back soon and we'll be all three together again. But as always, it has been an absolute pleasure talking about fintech with you, and I will catch you on the next one.
See you next week.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.